Well, welcome back to the ENTJ podcast. I'm Dan. I've got my friend Sean here. Today we're going to talk about Wall Street Bets, which is extremely topical at the moment. I think ENTJs, this is a personality channel, are people who are involved in financial markets, and they're people who might be interested in this kind of thing. If you've been following the subreddit for a long time and you run a trading company.
Yeah, so my name's Sean. I run a small little prop trade firm, I guess you could call it. I use algorithmic trading. That is automated by computers, obviously co-located with some really big banks around the world, and I transact anywhere between sort of $5 and $7 billion worth of currency a week. Manage, yeah,
That's crazy.
Yeah, it's pretty intense.
So let's talk about Wall Street Bets. I know I've been following that subreddit for about a year, and what I gathered, at least what it used to be, it was a place for people just everyday people to share what they're doing on the stock market, some big wins, some losses. But then things started getting silly, and I think things started growing to an unprecedented level. How would you describe what Wall Street Bets actually is?
Wall Street Bets, yeah, man, I've been on that forum for, gosh, maybe 2.5, 3 years. There's some classic posts on there. I remember one guy, he applied for a bunch of credit cards, and then cash advanced his credit cards to fund his brokerage account.
No.
And then he bought like $50,000 worth of calls, and the stock didn't get to the price it needed to by the date that he had sort of set, and so he lost all that money and was sort of asking advice on how to declare bankruptcy. So those were good times. He just had his screen recorded his brokerage account and was sort of filming himself on his webcam, and his account just went bang down from tens of thousands of dollars down to $0.
Like instantly. Yeah.
On the market open, it was just funny. And he made this like croaking noise with his throat. I just remember just laughing my head off. But yeah,
it's like trying to make fun of like your own misery and just share like this just the stupid stuff that you do. We won't use the language that they use on Wall Street Bets because as you said, it's not exactly PC appropriate. But I think what happened eventually is I think people don't always realize this, that a stock price is divorced in some ways from the actual company. Like it should be a reflection of the value of the company or the future value, but it's not always the case. And so when Wall Street Bets started getting popular, I remember there was this one post where someone let a chicken loose, and if the chicken went to the left, there was like some food on the left, then they were going to sell their stocks. If the chicken went right, they were going to buy some stocks. And anyway, I think the chicken went to the right, and then it was like, yes, boys, we're in. The stock's going to go up. Like the profit chicken has shown. The chicken is
chosen.
And then, so Wall Street Bets has in some ways become this kind of grassroots way where I'm not going to use the word manipulation of stock prices because that might have some legal connotations, but just another way for stock prices to change without them actually being tied to the performance of the company. And I think that's when it started gaining more and more attention, because you could actually start making money on Wall Street Bets if you were paying attention to what was being posted.
Yeah, I'd sort of be wary of saying something like, oh well, the chicken went to the right, so a bunch of people bought some stocks, and then the stock price went up. And that's not exactly true, because Wall Street Bets essentially as a group of people were so the amount of money that they control is so ridiculously small. So for users of Wall Street Bets to essentially move a market it's basically impossible. So what we saw a lot of what's happening, I think a lot of people are talking about this company GameStop, or this stock. And there's a few others as well. I mean, like Tesla and AMC and Nokia as well. Palantir is another one that they're called meme stocks. So basically, just people just jump on board and buy them. You've got essentially it's pretty tough. Like if you're thinking about it from sort of a global view,
I think the average person doesn't understand the complexities of the system. I consider myself an average person, and I don't, because it's hard to see the practical value of those things in the everyday world. Obviously, in your business, it's important that you have a thorough understanding of these things, because you need to write software that takes advantage of it. But let's connect what we're talking about here with GME and Wall Street Bets.
Yeah.
How might this be connected with the global financial system and what's going on? Do you think this is a historic moment that the media is portraying it to be?
Yeah, it is historic. It's one of those moments where we've seen widespread access for retail investors into a market that has historically been walled off to them.
Yes, the retail investors is what you mean by your everyday investors, as opposed to like these
Yeah,
big Wall
everyday
Street
man,
people.
yeah.
Yes.
Yeah. People on Wall Street bets,
Yeah.
or just the average Joe Blow on the street.
Yeah.
So you're at a house party and people are talking about stocks. Those people are retail investors.
Yeah, with you.
Yeah, institutional investors are the guys who, go into the city and they trade this all the time. They're analyzing companies and they're looking at, the 10Ks and the 8K sheets that are being, sort of filed with the SEC or whatever, and they're, looking at everything and evaluating companies and saying, oh, this one's overvalued, this one's undervalued, and so on and so forth.
And so they're professional.
They
transact
transact billions of dollars.
They pay for a lot of data. But I still don't understand what's going on with GME and this whole situation. So
GameStop is essentially a store that sells physical discs and like Xbox controllers and PlayStation 5 consoles and all that sort of rubbish. So then what's happened is about a year ago, I remember reading something on Wall Street Bets about a guy saying GameStop is not as bad of an investment as you think, and here's why. And so he went through essentially like their entire balance sheet and was like, well, this is how much debt that they have, and this is how much value that they have in terms of like cash in the bank and like brand value, and how much inventory they have on their shelves, and this is how much their revenues are per month, and this is what they're paying in salaries. So all this sort of stuff is available. And this guy posted this information and said, well, GameStop is actually in a net positive position. So they might have like $1 billion worth of loans, but they had $1.3 billion worth of cash. And so that $0.3 billion, if you divided that into all of their shares, it worked out to be X amount of dollars. But, say $5 a share or $6 a share, but at the time it was trading at $3 a share. So essentially his argument was, despite GameStop's situation, their share price is valued at less than how much cash they had in the bank. That is, if they went totally bankrupt. Well, they couldn't go bankrupt because they didn't have more debts than they had assets. But if they wound up the company, they would end up with a whole bunch of cash in the bank. And if they paid out every single stockholder that cash would end up being more than what the current share price is. So he was like, okay, so this is. And then a couple of weeks later, someone posted something about Michael Burry. So if you guys have seen the movie Big Short, that was about this, Scion Capital was his hedge fund, and he was shorting everything that was going on in the Big Short. So if you watch that movie, you sort of know what a little bit about what's going on there. So he was shorting it, but when it came to GameStop, he disclosed that he had purchased a huge amount of shares. And so that's when everyone was like, oh, hold on, okay, this seems very interesting. And keep in mind, this is like maybe March of 2020 or something like that, April of 2020 now.
It's a long time ago.
And then another guy comes on, and his name is Deep Effing Value. And he's made this argument that that GameStop is overly shorted. So not only is GameStop's share
just pause
value
here. Explain again what a short is very clearly, so we all understand.
Okay, so a short is I think that a stock is going to go down in value. So what I do is I go to someone and I borrow that stock off of them, and I pay them interest, because it's technically a loan. And I take that stock and I sell it on the market. And then when the stock goes down, I buy back the stock at a cheaper price and I give it back to the person that I borrowed it from.
How? Okay.
So,
and why would someone lend you a stock? They're someone who thinks that the stock's going to go up. That's why they would lend it to you?
Well, that's why they think that stock's going to go up, so they still own it. Yeah. So it's essentially like renting out your house. You buy a house because you think it's going to go up, and you think it's going to go up in value, obviously. Someone comes to you and borrows that house off of you. Now, they're essentially renting it. They're paying you rent every week.
Oh, and then
Now
with the money that they
they
get
have
from
the
the
right to.
rent, they can then buy the house back perhaps at the end for a cheaper price, or
Well,
buy the
what they'll
house.
do is they'll go and sell the house, right? They'll go and sell the house on the market because think of it like trading cards. Houses is probably a bad thing because each house is different, but just like cards or bananas, every banana is the same. Every
Yeah.
every share in GameStop is the same as any other share. So you can just borrow a share off someone, sell that share on the market, and then when the price of those shares goes down, you just go and buy however many shares you previously sold at the cheaper
So
price.
shorting is like
Yep,
selling a share you've actually borrowed that you don't actually own.
correct.
So it's like,
Yeah, yeah, yeah. So you're paying interest. You borrowed something and you're paying interest on that thing that you borrowed, and then you sold it on the market and in hopes that you buy it back later on for cheaper than what you sold it for and you pocket the difference.
wow.
And then you return that share back to the previous owner.
So it's like selling a house that you don't actually own. That's just it's
Correct,
like,
yeah.
and
Yeah,
that you're
yeah,
currently you're renting a house. Someone says to you, "I'll buy this house off you." You're like, I'm only a renter, but yeah, I'll accept it.
yeah.
You sell it to them, or you give them the
Yep.
option of it, and then you come
The
back to
value of
the
the house
house owner
goes
and be like,
down,
"Hey, I want to." Yeah, that's mental. Now let's talk about
and then
naked.
you buy it back off them.
Yeah, and apparently there's been more shorts sold, or rents, stock
Yes,
rentals sold, than there actually are GameStop stock in existence. Like they've over leveraged here.
correct. Yes. So that was what Deep Value's thesis
Insight
was.
was, yeah,
Was Yeah, so he was like, not only is it a fantastic buy as a stock, but it has a potential for a massive, what they call a short squeeze. So how a short squeeze works is that if there is a bunch of people who are shorted a stock, that means they've borrowed that stock from other people. And so now what they have to do is, they have to buy back that stock. Now here's the problem. If the value of the stock goes up, they have to cop the loss. So they have to buy it back for more than what they sold it for, which means they lose money. But if there is enough people that have borrowed these stocks and sold them on the market, and the price starts going up, then they are all going to want to buy the stock back, which in and of itself increases the demand for the stock, which then
because people
increases
notice
the
the stock's
price.
going up, so they want to jump in, like other people. You're saying
Well, not jump in, but the people who have borrowed the stock, who are short on the stock, are seeing the stock going up and are going, "Oh, crocky, I don't think the stock is going to go
it's going to
down. I
go
think
down.
it's
Oh,
going
so
to
they
go
try
up.
to cut their
So I need
losses,
to
and
quickly buy back my stock and cut my losses.
yeah,
I'm
I
going to
see.
lose a bunch of money, but I'm better off losing $10 now than $100 next week." So they're like, "I need to buy right now." And then so what happens is other people
Everyone
start seeing the
buys.
stock going up and they're like, crap, I need to buy as well. And then everyone else is like, oh my goodness, I need to buy. And so then now is this frenzy of buying, and it's called covering your short position. So they're buying back these stocks in a frenzy to they're realizing losses, they're losing money, but at least they're not losing more money, right? And
Yeah,
so it's not so much people thinking that the stock is valuable. It's just that every
people.
single stock that is short on the market is a future buyer. And if there are enough future buyers, then you can anticipate future demand. And if you can anticipate future demand, then you can potentially anticipate a future price rise. And if the price rise is steep enough, then the demand exasperates itself. And it's like a big feedback loop until the price just skyrockets into the stratosphere, well past what the stock is really
Worth.
worth.
Yeah, and what's
Yeah.
a
And so
naked short?
a naked short is a very interesting concept where you, as a broker, you have a client who wants to borrow a stock to sell on the market to short, but there's no stocks available. So you just say, well, here you go, here's a stock. And they just sort of
They sell you
produce it out
something
of
that
thin
doesn't
air.
exist.
Yeah, pretty much. Yeah.
That's so, like, how is that? How is that legal? Like, how can you sell?
I mean, if you want to have a lot of fun, you technically borrow it. So they'll ask you to put up margin, right? So they'll say, oh, if you want to borrow this stock, you have to give me like 10% of the stock's value. And that's the other crazy thing is like you're essentially borrowing the stock, but if the stock's at $10, you only have to put up $1 worth. So if you have a hedge fund that's worth $100 million, you could borrow $100 million worth of stock. Well, it's not $100 million worth of stock, right? It's like
You say you
$1
can
billion
borrow
worth
100
of
times
stock.
that. Yeah.
You could borrow 10 times or 100 times that.
Yeah.
So you could borrow $1 billion worth of stock with $100 million in your bank account. Now, if that stock price goes up like 10%, you're royally screwed. And so that's what we're seeing at the moment with GameStop. There's some big companies that not only did they short the stock, they borrowed stocks that didn't exist and sold them onto the market to try to short, and now they have to try to buy those stocks back. And they shorted the GameStop shares at like $20 or something, or $15.
Wow.
And
if
they
it
weren't
goes
returning
above
those.
$15 or $20, they lose money.
Yeah, they're losing money. Yeah.
Yeah.
Yeah, they start being underwater. And these guys are underwater billions of dollars. Like, it's horrendous, the amount of money that they're losing. And so a bunch of people on WallStreetBets sort of started seeing the pricing go up, 5 to 7 to 10 to 12. And then a bunch of them just started buying buying the stocks, and then the people who had short positions, these big institutions,
We're forced to
started
to buy
freaking
as
out.
well.
Yeah, not quite. There's also a component of it called a gamma squeeze, which is a little bit also complicated.
Okay. Yeah.
But essentially, instead of buying a stock, you can buy a contract that allows you to purchase a stock at a later date. That's called an option. So you
Oh,
have an
yes.
option to buy. Yeah, so you call those a call option. And
Yep.
so what happens is a broker can write you a call option, essentially a contract, and you can say, I want to buy 100 stocks. I want the right to buy 100 stocks at $15, but the stock is currently trading at $10. And so what I need to do is get the price to be above $15 in a month's time. And then if the price is at $16, I can buy the stock at $15, which is what the
Yeah.
contract allows me to do. But the stock is actually worth 16, so I've made $1 per stock,
Yeah.
right?
That's options. Yeah.
So that's how options works. So then what a market maker does is it writes that contract, but the market maker needs to ensure that they're going to have enough of those stocks on hand just in case if the price goes above $15 by the end of the month. Because if it does, they need to give you those stocks at $15. So then what they do is
they're
they
writing
hedge
the
their
option,
bets.
assuming that you'll never actually exercise the option to buy the stocks.
Correct. Yes. But there is a chance that you could. So
Yep.
what they do is they sort of hedge their bets. They say, okay, there's a 10% chance that this could happen. So we'll buy 10% of the stocks that we owe this guy. And as we get closer and closer, as things start looking more and more like it'll go above $15 by the end of the month, they start buying more and more of these stocks.
Just to cover themselves.
Purchasing just to cover themselves. And so by the time it looks like it's 100% certain that this stock is going to be over $15 by the end of the month, they have 100% of the stocks that they owe you on hand, so that by the time the end of the month comes, they give you those stocks. And you buy those stocks off them for $15 a share. And so that's called, they sort of hedge themselves in that way. What happens is if enough people purchase those options, then simply the act of the brokers hedging their bets forces the price of the stock to go up, which is gamma squeeze.
Because that's kind of funny because they don't want it to go up, but when they buy,
no, they don't really care. They don't really care. They're sort of they hedge themselves, right? So that's why they're.
Let's just talk for a moment on brokers, because if you buy a stock, you can't necessarily buy it directly from GameStop. You have to buy it from a broker.
Through a broker, yeah.
And these brokers are trying to make money along the way. Are the brokers, are they losing big here with Robinhood, for example?
Technically not, but potentially yes. So technically speaking, they should never lose money because they do what's called they have a bid-ask spread. So that means that people are bidding, say, $9 for a stock, and then a seller is asking for $11 for a stock. And then so when you buy a stock, you have to pay that $11. And then the broker is selling the stock for that $11 price. But the broker can also buy the stock for $9. So they essentially make profit on the difference between what the buyers and the sellers are asking. But for some brokers, they have really big clients like hedge funds, where they lend money to those hedge funds. And so the issue is if those hedge funds cannot pay
back their
their debts, the brokerage could find themselves in trouble.
So is this why, because with what's happening with Wall Street Bets and the whole GME situation, is that a lot of brokers are not allowing you to buy stocks with them? Is that perhaps to protect these hedge funds? Because if the hedge funds go out of business, then any money that they've obviously lent to these hedge funds in the anticipation that they'll make money from the money that they lend them and they'll pay it back with interest or whatever, that they're going to lose out on that, and so they're just sorry.
Well, that's what happens when you have a lack of liquidity. So that's when you hear about like the word liquidity is sort of bandied around.
Yeah.
And so that's what I do in the foreign exchange space, is I actually provide liquidity because I'm transacting so much. There's just so much, dollars and stuff flying around that you can pretty much always buy at whatever the bid and the ask, and the bid and the ask difference is very small because there's so much competition. People are selling and buying all at the same time. But what happened in GameStop's case is that people started educating themselves on Wall Street Bets on how to squeeze these big institutions that have shorted the stock. And these big institutions were extremely greedy. Like you said, they borrowed 140% of the available stock on the market, right? So they just had these positions where
which is
they
as
were
long
going
as the
to need
stock
to
goes
buy
down,
back.
they'll be fine, right? As long as the
Which
stock
they'll
goes
be fine,
down.
yeah.
And they're making money off the everyday investors, right? That's who's losing out in this situation.
Yeah, generally speaking,
investors.
I mean these guys bet big, and like if they take enough of a short position, if they're selling enough shares, like if they borrow enough shares and sell them all at once, they can set their pricing at they can set I'll sell 10% of the shares I want to sell at $10, another 10% at 9, another 10% at 8, another 10% at 7, another 10% at 6, and so what happens is people then buy at 10, but once all the $10 stocks are taken, then they have to buy or they they want to sell at 10, other people want to buy there, then they have to take the next level down. And so that's what in foreign exchange we call it book depth. So the top of the book is literally the top price, but if all of the stocks available at that price are gone, then you have to go to the next price down, and then the next price down, and the next price down. So if you have enough control of the sell volume or the buy volume,
because you own so
you can
many
essentially,
of the stocks.
because you own so many, you can essentially dictate the price and make it look like the stock is tanking because a bunch of people are needing to sell, but actually no, it's just offering stocks at all these prices all the way down. And then what you're hoping to trigger is a cascading effect where other people, where a retailer investor, for example, might see that the stock price is going down. And then what happens is they go, oh, crikey, I need to sell my stock then because the price is going down. Of course, them needing to sell their stock, they need to sell it instead of at the $10. By the time they go to sell it, they're selling it at the $8 because, that's what the current market price is, right? And then sort of algorithms sort of start picking up on this sort of stuff. And then all of a sudden, the price comes all the way down to $3.
Then the other stockholders start reacting to that in sort of a natural fashion. And sometimes it's even software controlled. Like people will say when it hits this and sell, and then you just boom, the stop. And so in that way, like you wouldn't
that's
say
called stop loss hunting. That what you just described then.
Okay.
So hunting for stop losses.
So in that way, like these hedge fund managers, they're not doing. I mean, apart from their connections to the government and the protections that gives them, it's just that they're very well educated compared to the average retail investor,
and sophisticated and have,
and that's I guess why they're called hedge funds, because they're so big, it almost gets to the point where they're too big to fail. But the unfair advantage that creates is like if you're just an everyday person, you maybe you don't even know. You don't have enough information. You're just an everyday person, mum and dad investor on the stock market, and then second, you have tools at your disposal to control the outcomes of stock that is not available to the everyday person. But I guess what Wall Street Bets is doing is removing them of that power, perhaps through social media.
Not so much removing all the power, more like leveling the playing field.
Because
And so
I
you've got
guess
to keep in mind, GameStop is one stock on a market of like in America. I mean, you're talking about an exchange stocks thousands, maybe tens of thousands of stocks.
yeah,
So it's literally just one ticker on a huge ecosystem. Like people just do not understand how massive this ecosystem is. But
yeah.
yeah, they started realizing that they could do things in order to not allow their brokers to lend out their stocks to people who wanted to short. Because if you buy a stock at a brokerage
Wait.
firm,
Say that again.
that
That was confusing to me.
so if you buy a stock at a brokerage firm, the brokerage firm holds that stock on your behalf. Now, the brokerage firm can lend your stock out on your behalf, and
They can short your stock.
to
You're saying.
no, they can lend it out to someone who wants to short.
Okay. Okay. Yes.
So in WallStreetBets, what they started saying was changing the settings on their brokerage accounts or calling up their brokers and saying, I don't want you to lend out the stock. I want to keep it in my, I don't want it to be lent out ever. And so what that did is it meant that the people who wanted to short could not find as many stocks to borrow in order to short. And if you can't find enough stocks to borrow in order to short, then you can't sell enough stocks on the open market to drive down the price.
And
And
the
if you
price goes
can't
up.
drive down the price, then the price is either going to stabilize or go up. And if it stabilizes, you're paying interest the entire time on the stocks that you've already borrowed. If
Yeah.
the price goes up, you're looking at a situation where you might have to cover your short position by buying back that stock at whatever the
At a
current
higher
price
price.
is.
Yeah.
Yes. And so what we saw yesterday was the spread on GameStop. The bid was $196 and the ask was 5,000. So that is the cheapest that anyone was willing to sell their GameStop stock at
It was
was
5,000.
5,000 US dollars. And the most expensive that anyone was willing to buy was $196.
So there was very few stocks actually being transacted then. Well, none.
No one was selling. No one was selling. There was no stocks left to borrow, and um, there was really, if you wanted to buy anything, you couldn't. So the only way for the stock to move was up because no one was selling.
Yeah.
And
And
you've got all this demand there. You've got 100% worth of the stock, you know, that needs to be purchased sometime in the future by these guys who have shorted it. That demand is still sitting there, needing to be fulfilled. It's
because
like this big rubber band that's been pulled back.
yeah, it's almost like, I guess you're saying the hedge funds, they have tools to manipulate the market, which are at their disposal. But Wall Street Bets has almost created a tool that the commoner can, let's call ourselves commoners,
Yeah,
can use at their disposal, which is, I mean, it's just the power of the people and the power of like these viral posts, which
yeah,
instruct people or try to educate people first of all, but then say, hey,
yeah,
this is what's going on. I don't think it's a good idea to sell your stock right now. Just keep holding
yeah,
that stock. Don't sell your stock.
yeah,
$5,000
yeah. Don't sell
is
it.
the cheapest I'll let you sell this stock, which you bought at like $5. Let's keep in mind. Like, I mean,
Yeah, that's right.
the
Yeah,
where the increase we're talking about is absolutely insane.
yeah, it's
But
crazy.
at this point, they haven't been. Is the right term margin called, or they haven't been called on this? That they haven't had to pay back their buy back
Technically, the
their.
short sellers have been margin called like 30 days out of the last 30. Because there's like a thing that New York Stock Exchange tracks where it's I forget what the actual term is because I don't really trade stocks or anything, but it's essentially saying that these a certain number of stocks were meant to be returned at a certain date
Yeah.
and they weren't, and so then they record a strike against that stock for that day, and they've recorded strike after strike after strike after
But
strike
they haven't. But they haven't.
because
They haven't actually paid up. Like, how are they allowed to get away with that then?
exactly. How are they allowed to get away with that? That in itself is crazy, because these short sellers, they need to buy back their stock and return it to the people that they've borrowed it from, but they haven't for over a month now, I think.
And
So
why?
they're just still holding on to their positions.
And why isn't like, what power is there to force them to do that? And because I think
The government, the government has the power to enforce them. Yeah, but they won't, right? Because they bailed them out in 2008. They didn't send anyone to prison in 2008. So now there's just this Mexican standoff between retail investors and essentially these big
so I mean they will go
corporations.
bankrupt, right? I mean if they were forced to actually buy the stock that they need to cover their short
Yes,
position.
if they were forced to, then you would get what's called a short squeeze trigger. So if they if one guy who had, say, if out of all the shorted stocks he had 20% of the stocks, and he needed to buy back his 20%, that would drive up the price enough where everyone else would have to start buying back their stocks and returning them, and that action is a short squeeze.
So that's very. So I mean, these big guys, they can't lose almost at this point, because even when they fail, they just go, "Oh well, I'm not going to do what I should do."
Yeah, exactly. But yeah, and I mean, that's the scary thing, right? Because the brokers, not only have these guys borrowed the stocks, but they don't have enough money in their accounts. They don't have the money in their accounts to essentially buy back the stocks because they borrowed it on margin.
Yeah.
So,
So
they
don't
might
have to
only
pay
have
one
10%
percent
of
of
the
it or something,
value.
or 10% of it. Yeah,
Exactly, yeah. So, and that's crazy in and of itself, right? Like this
that was
entire
allowed to
thing is
happen.
just it's allowed to happen, but this is like the 2008 financial crash, right? It happened on such a scale and so irresponsibly and so over leveraged that, they're getting caught with their pants down. And everyday people, are banding together and refusing to let them off the hook. They're
Yeah,
refusing to sell their stocks for a cheap price.
because they're doing
And
everything they
so
can to drop that stock price. They're doing
they are.
but even now,
So
like I don't
they'll
understand
put it
why the
on a trading
brokers.
hold.
Sorry, I interrupted you.
Yeah. So they'll put it on a trading hold, and then what they'll do is they'll sell the stock to each other at a lower and lower price slightly.
Hmm.
So it's like, I'll sell you this banana for $10, you sell it back to me for 9, I sell it
Oh
back to you for
wow!
8,
So
you
the
sell it back
hedge
to me for
funds will
7,
sell
I
to
sell it back
each
to you for
other.
6. Yeah, they
Yeah,
sell it to each other, and it's
to
like
kind of
it's called
encourage
a
the market
short
to
ladder
follow.
attack. Yeah, exactly.
It's
Yeah,
just like
so it looks
fake.
like
It's just
yeah,
it's an illusion.
yeah, yeah, it's they're fake transactions. Yeah, I mean, they are actual transactions, right? I mean, they're losing
But they're
every
not
time.
available to the public. They're just between two people, and because
No,
they've perhaps got really fast connections, they can make sure that they're the ones that pick it up rather than the everyday investor,
well,
right?
you can only really do it when there's low liquidity. So when there's not many people sort of participating in the market. So
Because
a
anyone
trading
could
halt is
kind
a
of pick
perfect
up that
time.
transaction, but because there's low liquidity, they can ensure that it goes to the right person, that the game
Yeah, they can
works.
ensure like, okay, you bought this, and then you'll sell it back to me, and I'll sell it back to you, and you sell it back to me. Someone else comes in and is like, oh, I'll buy it at that price, and then it's like, oh, crikey, the jig's up now. They're
Yeah,
like,
and
oh, I'll
so
buy it at
Wall
that
Street
price, and I'll
Bets has
sell it
kind
for a
of
higher price.
yeah, and so the
So
Wall Street
yeah, and
Bets
then
has
the
kind
whole
of
jig is up.
made it's kind of like it's kind of like pulled the curtain back behind what these
Yeah,
hedge fund managers are doing, and
yeah, yeah.
um, and holding them accountable to the risks. I mean, they took a risk. They play with people's
They did.
money, and they made the wrong decision. Like even if Wall Street Bets hadn't perhaps picked this up, like it wasn't the right stock to do it with GameStop, because as you said, that was at the deep effing value. He realized that like the cash they had on hand was higher than the stock price when you share it out. So it's like they took it. They made a bad decision. They should be held accountable for it. They've tried to do everything they can to bring that stock price down artificially. I'm not going to use the word illegally, but it certainly has that feeling of illegal.
Yeah.
And now you're saying the government should get involved, perhaps, because they're just
Well, the
just
government should get involved and force these big companies to buy back the stock at whatever the market price is, and give those stocks back to the owners that they've borrowed from, who really have
because now the price
been,
has gone up. That
they're
would be
way
awesome if
overdue.
they can get it back. They'll make heaps of money, but they're not at the moment, I guess.
Yeah, well, not quite. Yeah, I mean, yeah, they've been, obviously, the stock that has been lent out has been going up in value the entire time, so that's fine. Like they were always purchasers of that, and so if the stock goes up, they're always fine with that. On top of that, they're getting paid interest, but the scary thing is that they're not getting their stock returned to them, And so, they're on the New York Stock Exchange watch list for those stocks because they're waiting for the stock to be returned and it's not being returned by these big funds. So, yeah,
because they can't
it's
afford to buy it because the price is so high.
because they refuse to buy it. Yeah, because
They refuse to lock in
because
their
they
losses.
know, yeah, they refuse to realize their losses. They refuse to lock them in. And they know that if they start locking in some of their losses,
Then the
the
price is going to go up.
very action, yeah, the very action of them locking in their losses
Increased
will
demand
ensure
obviously is
further
going to,
losses.
yeah, increased
Exactly.
demand is going to
And
make
that
it go
is a
up.
short squeeze.
So they're just going to try
Yeah.
and hold. They're trying to hold and hold for paying their debts as long as possible. Hope that this all blows over.
Yes.
Hope that the stock price
Yep.
goes down,
Yep.
and 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 Wall Street Bets is holding them accountable to that. And I think if it wasn't for Wall Street Bets, I mean, there's been some huge jumps and some huge spikes I've seen. I think those huge spikes would have scared off the average person, but I guess it's like a
But
community of
the
people
huge
coming
spikes
together.
aren't being driven by new people buying. So you've got to keep that in mind.
What are they driven by?
Demand demand is driven by people needing to buy, wanting to buy a stock.
Yes.
You can need to buy a stock for one of two reasons. You simply like the stock and you think it's going to go up, so you purchase it. Another reason why you might buy a stock is because you've borrowed it off someone and you've sold it onto the market, and now you have to buy it back again. That's another reason.
That's why the
And
I kind of lost you for a little bit there. You're saying that it's not new people buying stocks; it's people buying back
yes,
their then what do you shorts? It's buying back their shorts.
shorts. Yeah,
Yeah,
yeah, yeah.
yeah. Okay.
So
Now,
that demand is not driven by, just normal people.
what do you see in terms of like you said before? This is almost like a historic thing. Why do you say that? Why is this whole Wall Street Bets, let's call it a fiasco, something that's going to be memorable in history? Has it changed the rules of the game, perhaps?
I mean, it could tank an entire hedge fund, Melvin Capital. There's a few other hedge funds that have stepped in and actually lent them money. Robinhood and a whole bunch of other brokers for the first time ever have refused to allow people to buy a stock, um, and have only allowed selling. I mean, the stock's been halted multiple times. We've seen those short ladder attacks, which I described earlier, happening. For the first time, I think, in history, Ted Cruz, Alexandria Ocasio-Cortez, or whatever her name is,
AOC, yeah.
AOC, Donald
They've all
Trump
agreed.
Jr. And David Portnoy all agree on something. I
These
mean,
billion hedge fund
if that's
managers
not
need to be held
historic, I don't
accountable.
know what is, man.
Yeah, that's
I don't know what
progress.
is. Yeah, so I mean, you're talking about like this is historic, and you're seeing huge like on CNBC and CNN, big financial cable news channels. You've got them sort of lambasting and calling out Wall Street Bets and retail investors and saying what they're doing is irresponsible and all this sort of stuff. And if you know anything about like the situation, you're just watching this in disbelief, going, "How can people believe this? This is absolute rubbish."
You're seeing
Um,
that almost like there's these hedge fund managers, perhaps. I guess what you're implying is they have connections with the media to kind of make these Wall Street Bet people look
oh, for sure they
irresponsible.
do. Oh, for
And
sure they
so,
do. Yep.
yeah, it's almost like I think what it's doing at least is it's waking people up to how the global financial system is being manipulated by people with a lot of money.
Yeah. Yep. Exactly.
And
Yeah, and a lot of people are waking up and realizing, crikey, this is just insane. I can't believe that they're able to get away with this.
yeah, and
And
then
yeah,
they need to be held accountable. And because I guess it's so complicated. It's like I don't what the average person's capacity to like understand this or even care, like to care enough to
mm,
try and understand it is I guess why they've been getting away with it for a long time. Because I mean, we're
yeah,
talking there's stocks, but then there's options and there's shorts, and then you borrow, and it's like, I mean, you'd
yeah,
probably have to
it's
spend
leverage.
you have to spend like 40 hours just kind of researching these things before you even get a sense of what's actually going on. So it's like the
Yeah,
barrier of entry for the average person to understand this, and I consider myself an average person, is huge.
yeah, yeah, it's huge. The barrier of entry is huge, and even if you get the knowledge,
How to use
simply
that
being able to open
effectively.
up a brokerage account is with the sorts of executions and leverages and everything that goes along with that is unbelievably
Mm.
tough.
Because I
The
think,
ability to raise capital in order to even buy the stocks in a
yeah,
meaningful way that can shift the market is unbelievably difficult. So yeah, it's the barrier of entry is very high.
yeah, wow. And I mean, and that's why I guess like the rich are getting richer during the pandemic because they understand the system and they've got connections with the people who make decisions within the system. The people who even make the decisions, perhaps like the politicians, let's say, probably don't have a three-dimensional understanding of the system themselves. So
That's
um,
right. Yeah, they're
it's
getting advised by people
who are
that they are writing, who are essentially benefiting from
yeah.
what they're advising them to do, which is crazy.
Yeah,
But
I
yeah,
mean, it's easy to have like the position that the global system is corrupt, down with the system. Like, I mean, I heard a quote that this has done more than what like Occupy Wall Street ever did in sort of a practical sense. And maybe they're right. Like, I mean, what did
yeah,
Occupy Wall Street achieve? And I don't know too much about that organization. I don't want to speak positively or negatively about it. I'm ignorant actually, but I've
yeah,
just heard that as a comment. But
yeah,
but I mean, it's easy to criticize these people, but it does also speak to like, yeah, we've had a global pandemic, and the rich are getting richer, and even when they fail, they're getting protected. Like something,
mm.
like it just seems like something has to change. Like
Well, because
it's not fair.
I'm a huge fan of capitalism,
Me too. I love
and
capitalism.
yeah, and so and but I hear a lot of people who are like who say that capitalism is fundamentally flawed, and it can tend towards becoming broken, like what we've seen here. Well, essentially what we've seen all through the life of capitalism, right?
Yes.
Um, is that there are people who ensure that they get all the benefits of the capitalist, um, sort of society, but get none of the downsides. And the downsides are if you make the wrong decision, you get penalized for it. You lose money or whatever. You make the right decisions, you get money for it.
Yes.
Um, and so that's essentially how it works. So a lot of these guys, Melvin Capital and Citron Research and stuff, they've made the wrong decision. There
And
is
they
no
need
doubt
to be
about
held.
that. In fact,
Yes. I hear what you're
yeah,
saying.
well,
It's
there's
like
nothing wrong with them losing a bunch of money, right? Because that's how capitalism works. But
yes.
they are fighting tooth and nail and using every dirty trick in the book, and getting brokers to sort of try to suspend trading and using this, short ladder attack, and a whole bunch of other stuff, in order to save themselves from their bad decision. The chickens are coming home to roosts, but they're trying to build the roof and not let the chickens in. Well, it could potentially work. I mean,
It's
you're
worked
talking
a
about
lot in the past.
it has, but you're also talking about there are other hedge funds stepping in and lending them money in the meantime
So I
to
guess
cover
they
their
don't want this.
losses.
They don't want the game to change. Like they
No.
want the status quo to remain that way. What
I
I hear
mean, the
you
other thing
saying?
is one of the hedge funds that's given Melvin Capital money, for example, also has a license as a market maker to write naked short contracts. So they can essentially, instead of finding stocks to borrow to lend to people who want to short, they can essentially make up the stock out of thin
That's
air
printing
using an
money. Actually,
IOU.
that's printing money.
Yeah, it is print. Yeah,
With the
exactly.
risk that
Yeah,
the stock price will go stupidly. As long as the stock price doesn't go up, you're printing money.
yeah. So they can produce sort of stocks out of thin air, in order for shorts to sell, and they can potentially do enough of that to force the price down if people are willing to sell. But if no one's really willing to sell, then essentially they're just selling it amongst
Why do
themselves
they have
to
this
make it look like
ability?
the price is going down again.
How have they got the power and the ability
Um,
to do that? Where does that come from? Because I
because
can't do
they
that. I can't just sell
no, you
stocks that I don't
can't, but you're
own.
not a market maker, so or a liquidity provider. So yeah, there's certain institutional players who have certain powers, but they also have certain responsibilities on top of that. And so it's my opinion that if you are able to sort of write, short contracts, then you shouldn't have the ability to profit in any way from writing those short contracts. So what they're doing is like they've invested in these hedge funds that is short and wants to borrow more shares in order to short the market more to drive the price down. And these guys can essentially produce, they've lent them money to cover their losses, but if the hedge fund goes broke, then they're not going to get their money back. So not only have they lent the money, they got a vested interest to make sure that this hedge fund doesn't go broke, but they also have the power to give the hedge fund exactly what they need in order to not go broke.
Yeah,
So
that's a that's having your cake and eating it too. It's like, yeah,
yeah, it's nuts, but that's how the game is played.
yeah.
Yeah.
And I think
So as
when
long
you're
as
talking
no one
about,
on Wall Street bets sells, it won't work.
yeah, I think it's easy to
Yeah.
criticize capitalism in instances like this because it's like, well, clearly something's wrong. But I know capitalism for me like has allowed me to have the freedom to do the things I'm good at and not be restricted. So I've personally benefited from being able to access credit to working within a free market. So what criticisms I
Yeah.
think are valid here is that this isn't a free market. Like as you said before,
No, it's not a
these
free
people
market.
are
No.
actually they get the benefits without the risks. They get the positives
Yeah,
without the negatives. And I think
that's
if you
right.
wanted to protect this system we have, and I mean, look around you. I mean, there's a lot of people hurting, but there's a lot less people hurting than there were 100 years ago. There's a lot less people
That's
dying.
right.
There's a lot of other issues which definitely need to be talked about: anxiety, depression. And we've talked about this on our show in the past. But it's like there's education available. It's free. The world, by any standard, even if you look at the absolute poverty line, which it's shrinking. Believe it or not, absolute poverty is shrinking every single year. But what's not
Yeah.
shrinking? What's not shrinking is the gap between the rich and the poor in many places in the world. And one of the big reasons
Yes.
is because the big people, the rich, aren't losing. So we actually
Yes.
hold the rich accountable, make them lose, force them to lose when they make a bad
Yeah.
decision, like GameStop. Then perhaps we can even have a better system where that money is not going to be. We talk about taxing the rich. Well, that's one thing. We can talk about that another time. But how about just holding the rich accountable to their losses? Because once that
Yeah.
happens, that money will actually be freed up and then go to the let's say the common person, go to you
Yeah.
and me. Like it'll balance the playing field a little bit. So
Yeah.
because I guess
And that
like
money
the
doesn't
bottom
get
still gets
locked
the
away
benefits.
in a bank. Well, that money doesn't get locked away in the bank, right? Like a lot of these guys who bought shares at like $5 on GameStop and now it's trading at 330.
Yeah,
They might have bought like $10,000 worth of shares. That's gone massively up. Now they're paying off their homes, they're buying a new car. All that money is going straight back into the economy again.
that's true.
So this sort of notion that like um yeah, the whole reason why the rich are able to get richer is because they can stop themselves from losing when they've made a very risky decision. And that risky decision can pay off fabulously. But I sort of naively bet against the market in like June or July because I was not expecting the economy and a lot of these
Be doing
companies to
so
get
well.
bailed out. They got
Yeah.
bailed out so hard. And I sort of had a little bit of faith in the system that like, well, this company that was paying out massive bonuses to all of its executives and doing share buybacks in order to drive up its stock price in order to justify paying out even more bonuses to its executives, instead of maybe putting that money into a savings account, save for a rainy day. I sort of expected those companies to go bankrupt and have to liquidate all of their assets. And then someone along and someone who was responsible, who actually saved their money, to come along and go, well, those assets are underpriced now.
I'll buy them.
And they're
Yeah.
actually valued more. So I'll buy them and I'll put them to work and make them productive and useful. But I've made my decision to see that maybe the market was being a bit too crazy and a bit too wild. And so me saving my money has given me a little bit of short-term pain because I'm watching everyone have these like
But
crazy
you've been
returns.
fiscally responsible,
But I've been
and you should
fiscally
be rewarded
responsible.
for that. And
Exactly.
but you're not able to be rewarded for that because for
No.
whatever political, yeah, let's call it political reason, that hasn't been able to happen. And I think,
Yes.
yeah, I love the freedom I have within a capitalist system to make money, and I have made money. Not a lot of money comparatively. But for what I've been able to achieve, I've been very blessed. I've been very happy with that. I don't want to be in some sort of system where I don't have that freedom and flexibility to where kind of my work is forced upon me. And I'm probably speaking very naively here, but I mean, if you look through history,
Yeah.
Systems with huge government control on the market have not done so well. I guess
Yeah.
I want to save capitalism. I can see the title for this podcast episode. It's like, why Wall Street Bets and GameStop is saving capitalism. I think maybe that'll be a catchy title. But that's kind of what we're talking about here. It's like, this is important, and I guess because the tentacles of these big hedge funds, who knows how deep they go, they have the power to kind of manipulate the public opinion on this issue even.
Well, they're trying to with these big news channels. So
so that's why Wall Street Bets, like social media. I mean, I think in the last few years, when it comes to politics and elections, it's been having more of a negative than a positive. But maybe for once, social media is actually able to have a positive change on political reform. And
I think with these guys at Wall Street Bets, it's very interesting. We'll see how it pans out. But they had a very solid thesis. The big companies tried to use every trick in the book to push it down, and now they're essentially at war. And we'll see if the authorities actually step in and do their jobs as a regulator. They haven't for the past month and a half. The question is yet to be seen if they ever will. But yeah, there's definitely some big things happening in Congress. There's some big class action lawsuits being filed in the Southern District of New York already. There's letters being written by Congress members directly to these companies now.
Wow, so they're starting to hold them accountable.
Well, we'll see if it's just noise.
Yeah.
Who knows? Yeah, but I mean, it's shaping up to be an absolutely massive fight. Honestly, I could see it's 30th of Jan now. I could see GameStop being at, well, I said to my brother-in-law GameStop would be at $500, and that was a week ago. So that was crikey on the 23rd. What was it trading?
It almost hit 500.
Change my chart. Let me just change my chart. So yeah, a week ago it was at $59, and he was like, "There's absolutely no way that it can go higher." I said, "Nah, it'll go to $500 fairly easy within a week." But I reckon it could definitely go north of 1,000, maybe even $2,000 a share, if everyone holds their stock, and squeezes these shorts for all that they're worth. It could definitely go massively high, and then of course it'll crash down. But not until every single one of these short positions have been absolutely liquidated. So
yes, and they need to be for the sake of capitalism, for the sake of late stage capitalism.
Yeah. For the sake of the principles that capitalism upholds.
Yeah,
these guys need to be absolutely punished for what they did, and it's not just them. It's these massive banks and stuff, and they need to be punished as well for what they did in 2008. They still gotten away scot-free.
Yeah.
So
this is like a micro. This is like a micro scale of what happened in 2008. Like
this is literally one stock. I mean,
we got to keep in mind how small this actually is.
Yeah, this is
also big.
This is such a small thing in such a massive financial ecosystem, and yet these big institutions are making such a big deal out of it, pulling out all the stocks, CNBC, CNN, New York Times, all these big publications, just dragging retail investors through the mud, calling for regulation to make sure that retail investors might not even be able to directly purchase or sell stocks themselves.
That's insane to me.
Anymore.
I mean, these brokers are private companies. They kind of have the right to do it, but ethically, morally, responsibly, should they? I don't know if you can stop someone buying and selling. Like, that's not capitalism.
No, it's not.
That's the opposite of capitalism.
Yeah, exactly. Yeah. So honestly, man, it is just absolutely insane what we are seeing. Some of these, people shopping around ideas and stuff, and so yeah, I'm very interested to see what happens. So
Yeah. Well, I think we could probably finish there. Is there anything else you wanted to talk about before I let you get some sleep? It's Saturday morning right now for you, and it's
Yeah,
it's like
1
1
a.m.
a.m. or something.
I'm absolutely cooked, but all my alcohol's out of the system now, so that's good.
That's good. Yeah, I could see like halfway through you started to really fire up. Yeah, for those who didn't know, Sean's just he's been at a dinner party before this, and his wife's had driven him home, and we are gonna have this chat. But thank you for coming and chatting with us today, Sean. I've learned a lot, and I hope this video was watched by a few people because I want people to understand an insider's perspective. You've explained it really, really well, and yeah, let's hope and pray, thoughts and prayers for the folk at Wall Street Bets that they'll succeed in holding people accountable for the risks that they've taken and then lost.
Absolutely. Yeah, absolutely. Thanks, bro.
Thanks, man. See ya.
See ya.